News Radio 840 WHAS. Good Sunday morning. Bob Sokoler and the Louisville Real Estate Show with you until the top of the hour. Hope you're having a good morning as we get even closer to Thanksgiving and the meals that will come. With us today, some great folks. First, we've got Chuck Crosby, who is the head guy over at the Crosby Law Offices. You can reach out to Chuck anytime on his cell phone at 499-6360. In for Randy Rocky over at Swan Financial today, we've got Andy Wilson, and you can reach Andy at 270-933-2280. And if you miss those numbers, we'll be giving those numbers out several times during the next half hour, so be ready for those. And me, Bob Sokoler, if you're thinking about selling your home, want to talk about a plan down the road next year, year after, whatever it might be, or just talk about buying and selling, call me anytime, 376-5483. That's 502-376-5483. If you want to see a rebroadcast of the show, head over to LouisvilleAnswers.com, www.LouisvilleAnswers.com, where you'll see the YouTube version of this, which also has our video as well. It's coming up a little bit later on in this show. In your house, do you have mice? Have you seen them? I am guilty of seeing those. It's a real problem, and we'll have some answers, according to some experts, on mice in your house. First, we start with Andy with a question that comes down from Carl. He heard our show several weeks ago with questions on mortgages, and Carl was building a new home. He had been pre-approved for the mortgage, but he failed apparently to lock in at the lower rate, hoping it was going to come down. But now with interest rates up, he can no longer afford the home. So, a challenging one, Andy. What are your suggestions for our listener, Carl?
You know, that's pretty tough. Maybe look at an adjustable rate for a minute. You're in a pickle, right? I mean,
Yeah.
There's really, I don't know that there's really much that you can do other than if you can find a 5-1 arm that's got a lower interest rate attached to it, or
what about a 2-1 buy down?
You could do a 2-to-1 buy down as well. So
explain what that is. Yeah, explain for folks who don't know what that is.
Yeah, so basically the seller is buying down your interest rate for 2 years, right? So it's like a step up, right? That really probably wouldn't work though, because you've got to qualify based off of the end rate. So, yeah, I mean, really, you're in a pickle there.
Yeah, that may be more difficult. You could go to a hard money lender that you'll pay a little more in interest rates, but he might be able to float that way. That might be one suggestion. Yeah, no one said these are ever going to be easy questions, but welcome to the world of our radio show, Andy. So we're gonna move on because there's not much we can do on that one. Chuck, this is one, and we're going to change the name of the person who wrote the email because she is an area real estate agent. So Karen sends us this email. She says, recently she had a buyer that was adamant about submitting offers at 40% below asking price to see what happens. By the way, this week we put a home on the market at, we'll just say X amount of dollars, and an agent called me and said they had a buyer who wanted to submit maybe not 40%, but lower than list. And in this case, we had multiple offers at least list, and if not higher, just to tell you the mindset of what a lot of buyers are thinking these days. So anyway, so each time that Karen submitted the offer for her buyers, the offer was rejected without a counter, which is basically telling the buyer, no, we're not even going to engage on this. But now this same buyer on this is asking Karen to submit 3 or 4 offers at a time to see if any of them are accepted. And she's wondering, is this practice acceptable in this current market?
Offering 3 or 4
offers on different homes at
different
the same time.
Okay.
Yeah, sorry.
I was thinking, are we changing our names on each one or
yeah,
what?
Right. Yeah.
No, that's pretty dangerous, mainly because what if they all come back accepted?
Mm-hmm.
You make the offer, If that's just downright silly in my mind.
Yeah, though I've seen this happen at requests where a buyer is asking for the agent to put in multiple offers, but ethically and morally, and Chuck, back me up here, we're only to put in one offer at a time on one property.
Well,
Because
what
of
if I
exactly
want
what
to
you
buy
said.
two? Yeah, what if I want to buy two properties though?
Are you qualified to buy two properties?
That's between me and them, isn't it? What if I just won the lottery last night? So I don't know. What I'm saying is that, no, I didn't win the lottery.
Too bad.
But yeah, too bad. But if I wanted to buy more than one property, and say I was doing a 1031 and I needed to get a few properties in there, I don't see anything illegal or unethical about doing it, unless you're trying to game the system. It's what's the motivation behind it? Is he only intending to buy one property? Well, at that point, you're gonna, if he really keeps pushing you, at the very least, I'd get something in writing saying, hey, I understand these are the problems that could happen. That's just, it's asinine to do that if all you're trying to do is buy one property. But I run across several situations where people do that in 1031s, where they're doing replacement properties, and you need more than one sometimes.
Got it. Okay. By the way, if you are thinking about looking at reviews, because reviews, like if you go to buy something on Amazon, I always read the reviews. And many of them are verified, though I heard that sometimes you can even game that whole system. But when you're dealing with Zillow or Google, you cannot game that system. They will knock you into a sandbox if any agent tries to do that. So check out our reviews. Go to LouisvilleZillow.com or LouisvilleGoogle.com. Will direct you directly to the reviews that we have online. We're really proud of them. All right, so Nikki sent us an email. She says, and listen carefully on this, Andy, and Chuck, you may need to jump in as well. Nikki says, her name is only on the mortgage. The ex-husband's name is not. We're both on the deed. And now he is wanting to buy the condo, and he wants to take over the loan, but he isn't on the mortgage, only on the deed. And he says he's wondering how he and how Nikki can accomplish that by taking over the mortgage and taking her name off the mortgage. That's not such an easy thing to do, correct, Andy?
Yeah, I mean, if the name is on the mortgage, I mean, the only thing I guess you could do there is possibly refinance, or I don't know, Chuck, would a quick claim? What about a quick claim there?
No, I don't know any bank that would do that. There might be a hard money lender out there that might comply. But the thing that I think they're conflating here is the debt, the borrowing of the money for the purchase of the property contains two documents: the note, the promise to pay, and the mortgage saying, hey, if you don't pay, I'm going to take the house back. You can be on the mortgage, and it really just means you had an interest in the real estate that you're subordinating to the mortgage company's interest. The question is, who's on the note? So if she is the only one on the note, only the only one that promised to pay, I know of zero banks that will say, okay, we'll just swap it out. That's just not going to happen. The only way you can do that is do it without violating the due on sale clause, okay? Because the due on sale clause, if you convey a beneficial interest in the property to another party, then the bank loan can come due. There's a couple of permutations here. First off, if they were both on the deed at the time the mortgage was taken out, well, conveying quit claiming to him may not violate the due on sale clause, but it's not going to take her off of the note. The bank is still going to hold her responsible if he doesn't make the payments. And it's a common question. People want to do this. And I explained to them, look, why would you go off the deed and have absolutely zero control over the property, but 100% liability for the debt? Makes no sense to me.
It doesn't. You could possibly, this may be a solution, Nikki, is that he basically buys you out, but has to refinance with a new mortgage. That seems to be the only way.
And what you do is you coordinate the purchase or the buying out and with the refinance with the deed. So you don't give him the deed and then let him refinance. You make that as one of the conditions of refinancing. So they sign the deed at the time they do the refinance, and it goes in first, and then the new mortgage. It works out pretty well, and they're used to that kind of thing. Yep. But coming off the deed does not take you off the note.
Got it. All right, we move on back over to you on this there, Chucky. Sandy has a house that is vacant, but she still tries to take care of it. Now, get a load of this. The neighbors filed a lien against her property with the city because they're saying that one of her trees needs attention in terms of either being taken down or trimmed back. So I thought you simply, if you filed a letter, sent it registered to the neighbor, that puts them on notice. But these folks, have you ever heard of this where they filed a lien against the property for her to take this tree down?
Okay, first off, the individual owners can't file that lien. Before you can file a lien, you have to have some judgment, something from the court saying, hey, they're supposed to do this, or they owe you X money, i.e. they went in and they fixed something that the seller did. They sued, or the neighbor, and they sued the neighbor, got a money judgment. Then they can file a lien. Now, they may very well have called down to the city and said, hey, this needs to be done. And the city might have come out and filed some liens, but you just can't file a lien against your neighbor.
So it's maybe the city that's filed the lien. So how would she proceed against in this case?
She would call the city and say, hey, what do I need to do? Because if the city sees the tree like that and they say it needs to be fixed, that lien's not going to go away. And they're going to come out again at some point, and they're going to file another lien. And those things add up.
Yeah. Take this to heart and seriously and try to work it out. I don't think a cheesecake diplomacy is going to work in this.
No, this is get an arborist out there to take care of the tree.
Yep. And first find out from the city what they want to have happen, get the arborist out there, and then you can get the lien.
Because there may be more things. If it's overhanging branches, if it's, general disrepair, just if they've cited several different items, fixing one isn't going to make the others go away.
So let me ask you a question on this, Chuck. So if the listeners that are out there right now think that a tree on the neighbor's property could endanger their lives or their home by leaning or falling, do they call the city and complain, and then the city takes it from there? Okay.
Yeah, that's the idea.
Right.
Code enforcement exists for just that particular reason. It is against code to have a dying tree that is likely to fall and damage people. Same thing with houses that need boarding and all that kind of stuff. The city will cite you. If you don't fix it, they'll throw money judgment or money liens on you. If you don't pay those, they can and take care of the problem because they keep coming back. Then they'll go in, they'll take care of the problem themselves, and then the big money piles up.
All right. We're going to take a break on that note where the big money piles up, and we'll be coming back with more of your questions and then the problems of mice in your home. With us till the top of the hour, Chuck Crosby, who is the head guy over at the Crosby Law Offices at 499-6360. Also in for Andy Rocky over at Swan Financial is Andy Wilson, who's a loan officer over there. You can reach Andy at 270-933-2280. And you can reach me, Bob Sokoler, anytime to talk about listing your home, becoming a buyer, whatever it might be. And by the way, you can head to LouisvilleSellersTalk.com to see some of our video reviews. And you can call me as well, 376-5483. We're back in a moment on News Radio 840 WHAS. News Radio 840 WHAS. Bob Sokoler, the Louisville Real Estate Show, here till the top of the hour. With us is Chuck Crosby from the Crosby Law Offices. They do a great job of getting loans closed. And Chuck also does a number of other things, including wills. And we've talked about those a couple of weeks in a row now. It's so important to make sure your will is not only up to date, but also that the heirs and the family knows where that will is. It's an important part of it. So you can reach Chuck again at 499-6360. Also, again, Andy here. Andy Wilson in for Randy Rocky over at Swan Financial. He's a loan officer over there. You can reach him directly at 270-933-2280. Are mice becoming a problem in your house? Well, Samantha wrote in this. She said, I've seen signs of mouse activity around my home. I'm not sure what attracts mice other than food, and how are they getting in? How do I get rid of them? I had the same problem. I ended up calling an exterminator to try to rid them. I put those traps down, and we talked about these a couple of weeks ago with traps with peanut butter. But the story is that mice are attracted to almost any easily accessible food. So before setting mouse traps, this report says it helps to look around the spaces to see if there are any exposed food items that mice could be feeding on. And then they like to eat just about everything, including meat, but they do also like peanut butter. And although mice typically eat grains, seeds, fruits, their diet isn't selective. And in fact, mice can even feast on paper, electrical wiring, and cardboard to stave off hunger. If you have any holes, wherever they are, get some stuff. You can go to Home Depot or Lowe's or any big box store and ask them what will plug up a hole and prevent mice from coming through it. And you just put it in one of those tubes that you click on and it shoots out. Get it into the hole, seal up the holes around the house, go there with before it gets too cold and before it starts freezing, and seal that up, and hopefully you'll have a better, and then buy the mouse traps and have those handy.
Yeah. Keep in mind, Bob, they also enjoy diving equipment.
Oh, the rubber on the diving equipment?
They do. They
really
love that stuff. Yeah. I don't know whether they pad their nests or what they do with it, but we had a mouse and it ate up a good portion of some wetsuits and that sort of thing.
I'm keeping my gear in a suitcase that's just designed to go with me on the go to dive. So they got to get through the suitcase first. So we'll see what that happens. All right, Andy, back to you. Thomas, thinking about buying his first home next year. He said in an email to us he's currently making, and I'll give you these numbers then. He might not be able to do this on the fly. He makes $40,000 a year. He has $30,000 in savings, no credit card debt, except he has a $12,000 car loan. And he's wondering how much house can he purchase, and what would his price range be? Well, unfortunately, with the way interest rates are going, it's going up and it's going down and going up and up. Can you come up with what's the formula that you use that maybe Thomas can come up with when he reviews this?
Yeah, no, I mean, it's something, it's a case by case basis, right? I mean, there are some unknowns, what does your credit report look like? What is your credit? I mean, you have some really strong points there. I mean, 40,000 a year, is that correct?
Yep.
Yeah, I mean, that's a good income, right? I mean, you've got 30,000 to put down. That's a lot of money for a first time home buyer to put down. Those are all great things, right? As far as, you're looking to buy your first house in the next, what you said, six months, is that correct?
Something like that. Yeah, he's in that time zone where he's starting to look, and he's wondering how much can he afford.
Yeah, I mean, that's kind of an impossible question without looking at everything.
What's the rule of thumb for your income? I know Dave Ramsey had one rule of thumb that seems to be how many times your income of a home should you be looking for? Do you remember offhand what the latest is?
And that's something that you would have to talk to your financial advisor about for your specific situation. I'll tell you, ratios get kind of crazy with all the different products. A rule of thumb, your total debts, including the house payment, principal, interest, your estimated taxes, and then your insurance as well. About 45% on the back end for a home ready, home possible. 49. I've seen them go up to 49. It just depends on whether the automated underwriting system likes the algorithm likes what we're putting in for your specific scenario, right? If we go FHA, I mean, you're looking at about 56.5% on the back end. Now that's your total debts, including your principal, interest, taxes, and insurance payment on the home. That's kind of the rule of thumb that we use. Now there are front end ratio stipulations as well. I mean, it really depends, right?
Well, here's what I would say as not a mortgage loan officer, but what I would tell you, Thomas, you need to go with something that makes you comfortable with the monthly payment. That's what really it comes down. If you're going to be in debt over your head, you're not going to enjoy life. So what I think you do is you call a loan officer like Andy. He'll give you the details. But also, if you've got an accountant or somebody, a finance advisor that will help you, I think that's the way to go. That way you're protected. All right, let's move on. All right, Chuck, Marina is buying a home in Henry County for cash, called her insurance company. And by the way, cash is a key word as you'll hear come back up. Called the insurance agent to let the agent know that she needed the policy. The agent was coming back from a vacation, so he would not be able to insure and issue the policy until after closing. That insurance agent suggested that she delay the closing by a day, but the sellers declined to delay, citing that they had to buy another house. So Marina took ownership of the home, and just as luck would have it, a terrified deer crashed through the sliding glass door in the back of her home after closing. And so as a result, Marina is wondering, is there any chance the insurance company would pay for the damage?
No.
No way, right?
I can't imagine. If I were their attorney, I'd tell them no.
Yeah.
Yeah. I mean, it's that simple. If you buy a house without insurance and something happens before you have an insurance policy in place, you're just out of luck.
So I think this serves, and the reason I mention this question is I know we couldn't answer it verbatim because of, insurance companies are different. But would you not agree that if an insurance agent says to you, on vacation, or I can't get to this right now, go to another agent. There are a lot of other insurance agents, and maybe somebody who works with your insurance agent that he could recommend for you to go to. And don't ever buy a home. Yeah.
With the I'm not too thrilled with what the agent saying, hey, just push off closing, but that's kind of key. He said push off closing. He didn't say don't worry about it. Yeah. If he said don't worry about it, well, that might open a few toeholds. But if he said push off closing, well, then, frankly, if you were going to close, I'd be hopping onto another agent right quick.
Yeah.
But
listen, there's nothing wrong with going to another agent if your agent can't help you in the real estate business. If one of our agents or myself is busy, I have a backup of other agents who I would talk to them and have them take over, because the last thing you want is your client in the lurch, which is what happened with Marina. So, but check with your insurance agent first, folks. If they can't help you in the time that you need it, then ask them if they have someone who's covering for them, because typically they will. Yeah. And above all, never buy a home without insurance unless you're looking. Now, again, with the mortgage, Andy, you'll agree, insurance is going to be required. Yeah, it's got to be required.
Absolutely.
But as a matter of fact, we don't even get documents from a lender. They won't even do the CDs or anything until insurance is already not an issue.
Yeah, and I remember twice in my career of 18 plus years, cash closings, and I leaned over to the buyer. I said, well, who's your insurance company? What's in place? And they go, well, I haven't established an insurance yet. I said, okay, hold on. We're stopping right now for a moment. I sent the buyer outside to contact her insurance company, because they're paying cash, so they don't have to have an insurance policy, to get something written up and documented so that they're covered before they sign on the dotted line there. So it's crazy, but all right. We have another question. This one, and this is interesting. This could happen to anybody. Betsy emailed us, is hearing different stories about how good her credit needs to be to get a mortgage. In past years, Betsy admits her credit rating was not good, but she's been working on it. So in this case, this should be a pretty simple, easy one to answer, Andy. What's the minimum her credit rating needs to be to get a loan? And let's talk about both the conventional FHA and maybe even VA. What can you give us as the spread for a minimum for credit rating?
Yeah, so there are two different things, right? I mean, first, there are the minimum requirements for, FHA, conventional, VA, USDA. Then there are also additional lender overlays. So if we do hit that minimum and we're not much above the minimum, we got to find a bank that's going to take it, right? So typically FHA, VA, those are going to be 580. Now, if you're below 580 and you've got compensating factors, you've got a lot of money in the bank, you have a long history of paying your rent on time, every time, no lates whatsoever. If you've got compensating factors, there may be something that we can do for you with like a manual underwrite or something like that. Conventional financing is going to be 620 minimum. Now, if you're at a 620, most banks are going to require that you put 20% down. So for conventional financing, you really want to be, 700 or above, but we can get it done at 620. USDA, I believe it's 640, but also you're going to want compensating factors at that minimum as well. Do you have 3 months reserves in the bank? 1 month reserves equals one payment. It's the equivalent of what your house payment will be: principal, interest, taxes, and insurance, right? You have 1 month of reserves after you put your down payment and your closing costs. Do you have 3 months? Do you have 6 months? A lot of compensating factors there. So
yeah. So, and a couple of quick things. You're now able to use the history on paying rent. That's now being allowed. So if you got a good history of paying your rent on time, I hear that can be included in the factors. And the other thing is, remember, folks, the higher your credit score, the better your interest rate that you're going to be quoted. It just is a simple matter of fact here, right?
Absolutely.
All right. A couple of quick reminders as we wrap things up. If you want to see what sellers are saying about us, you can head to LouisvilleSellersTalk.com. That's over on the YouTube channel. You'll see some of the sellers that we've talked to. Also, if you want to see a rebroadcast of the show to share with friends and family, something that struck your fancy or of interest, you can go to LouisvilleAnswers.com. And if you want to talk about getting your home on the market, you can go online to bobsellmyhome.com or call me at 376-5483. You can also reach Chuck Crosby of the Crosby Law Offices for closings, wills. He's entertaining, he's educational, and he's a great guy. On top of that, you can reach our guy anytime, Chuck Crosby, at his phone number, 499-6360. That's 499-6360. And then for Andy Wilson, 270-933-2280. That's Andy in for Randy over at Swan Financial. Almost rhymes, right? 270-933-2280. We're out of time. See you next Sunday on News Radio 840 WHAS.